Hey everyone, welcome back to Corporate Decoder, the place where we unravel the truth behind corporate filings, and today we are looking into Concord Acquisition Corp. The Suit, a company that seems to be playing a bit of financial musical chairs with its deadlines. This filing is all about pushing back a key date, giving them more time to make a deal happen. But what does this really mean for investors, and what are the numbers telling us behind the scenes? Keep watching to find out. And before we dive in, if you like getting these straightforward insights into company reports, make sure you are subscribed. We also have a fantastic Discord community linked in the description where we break down these filings even further. Alright, let's get straight into this. The main event here is the extension of a very important date for Concord Acquisition Corp. The Suit. Think of it like this: they had a deadline to find a business to merge with, and that deadline was the 31st of December of 2025, but they needed more time. So on the 16th of December 2025, they officially changed that deadline. They pushed it back by a whole year, all the way to the 31st of December 2026. This is a pretty common move for special purpose acquisition companies, or SPACs, when they are struggling to find the right deal within their initial time frame. It essentially buys them more time to make a strategic move. The big question is, who approved this? Their stockholders. They had a meeting, and the stockholders voted to give the company this extra year. This means the investors who put their money into Concord Acquisition Corp. The Suit are willing to wait longer for a successful merger. It signals a level of trust, or perhaps a lack of better options for them right now. And it wasn't a small turnout either. A significant 92% of the shares eligible to vote were represented at this meeting. That is a strong showing, indicating a good chunk of the investors were engaged in this decision. Now, let's look at the actual votes. It was an overwhelming win for extending the deadline. A whopping 6,483,503 votes were in favor of the extension. Only 2 votes were against it, and no one abstained or had broken non-votes. This clearly shows the vast majority of shareholders wanted this extension. It's a near unanimous decision. Here is a critical piece of information. When this vote happened, none of the class of shareholders decided to cash out their investment. Usually, SPACs have a trust account where the money raised from investors is held. Shareholders can choose to redeem their shares for cash if they don't like the direction the company is going, or if the deadline extension isn't to their liking. The fact that no one redeemed means they collectively decided to stick with the company and its new extended timeline. This leaves about $99,263 in the trust account, which is a relatively small amount, especially considering the original amount raised in an IPO from a SPAC. This suggests that either a lot of shares were redeemed already, or the initial IPO raise was quite small. So, what exactly was amended? It is the company's certificate of incorporation. This is like the company's birth certificate, laying out the fundamental rules. They've amended this document to reflect the new termination date. It is essentially the legal paperwork formalizing the year-long extension. Now, looking at the structure, Concord Acquisition Corp. The Suit is a special purpose acquisition company. These companies are essentially shell companies created to raise capital through an IPO with the sole purpose of acquiring an existing company. They have a set time frame, typically 18 to 24 months, to find a target company and complete a merger. If they fail to do so before their deadline, the money held in trust is returned to the shareholders. The report is signed by Jeff Tudor, the Chief Executive Officer. This tells us he is the one formally taking responsibility for this filing and the company's direction. So what is the story here? Concord Acquisition Corp. The Suit. A SPAC needed more time to find a business to merge with. Their shareholders overwhelmingly supported this. And crucially, none of them cashed out their investment, leaving a small amount in the trust account. This is a vote of confidence, or at least a willingness to wait, from their investors. The company has now bought itself an extra year until the end of 2026 to make a deal. Now for my take, this filing, while seemingly simple, tells a story of a SPAC struggling to execute its primary mission within the original timeframe. The overwhelming approval and lack of redemptions are positive signals from the shareholder base. They are indicating they believe there is still value to be found. However, the small amount left in the trust account after no redemptions is a bit concerning. It hints that the initial capital raised might have been modest for a SPAC, or perhaps many shareholders had already redeemed their shares prior to this vote. The company's success now hinges entirely on its ability to find and close a suitable acquisition within this extended year. The biggest risk is that they fail again, and then investors lose their capital. The opportunity is finally finding a good deal that can create value. My conclusion is that while the shareholder support is a positive sign for now, the real test for Concord Acquisition Corp. The Suit is what they do with this extra time. They need to find a solid acquisition, and fast. Alright, that is our breakdown of Concord Acquisition Corp. The Suit's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more discussions. Thanks for watching. See you next time.